Earnings season has started and all eyes are on the banks. So what should we expect?
Bank earnings season kicks off tomorrow, at least for the big banks, with JPMorgan and Wells Fargo before the market opens. Earnings aren't going to be up big from a year ago, most likely. They're going to be down a little bit, but it's going to be a better quarter than what we saw in the fourth quarter, what we saw in the third quarter. Remember, the second half of last year, we had Europe flaring up. We had a U.S. debt downgrade that came over the summer. There was a lot of headwinds for banks last year, and they felt it. They felt it in their stock prices. They felt it in their earnings. Things are going to be better this time around. They're not going to be, incredible blockbuster results, but they're certainly going to be better than what we saw for the last few quarters.
What about trading revenue? I know the analysts are focused on that. What are you expecting in that area?
Well, the first quarter was a strong one for the stock market. There's no question about that. The S&P, the Dow, the NASDAQ, all up strongly. Volume was not huge. People weren't going crazy and making a bunch of trades, and a bunch of investors were still lagging the market. So what you didn't see was a huge volume surge, but what you did see was better performance, which will certainly help the banks. Hopefully more people are dipping their toes in the water. At least that's what these banks are hoping. And people getting involved, people making trades, that's what they need more of. So not a huge quarter on the trading side, I'm not expecting. We'll see more of that also next week with Goldman Sachs, Morgan Stanley. But again, much better than what we saw at the end of last year.
Okay, so Steve, bottom line with the banks, what should investors do? Buy, sell, or hold?
Well, when you talk about the bank stocks, you also have to talk about what we just saw from the Fed stress tests, which meant that some banks increased their dividends, some launched buybacks. JPMorgan, Wells Fargo, definitely in that camp, definitely in the camp of strong banks, strong relative to the industry, banks that are going to be returning capital to shareholders, whether it's through dividends or buybacks. Those are the kind of places where you might not get all the gain when it's a risk-on day, but you're not going to lose your shirt necessarily when it's a risk-off day. The Bank of America, Citigroups of the world, those have been more volatile. This year with a big rally, they've been off to the races, although Citigroup has pulled back of late. Those are more of the risky market-dependent names versus stronger firms.